Good morning. A beautiful day here in Indianapolis. Waiting for my wife to come down so we can do our grocery shopping. So I thought I'd take a few minutes to talk about the federal estate tax because that's what I do. So here's the deal. The federal estate tax is part of our country's transfer tax system. So everything you know about income tax, set it aside. We're not dealing with the income tax right now. We're talking about transfer taxes. There are three main transfer taxes: the gift tax, the estate tax, and the generation skipping transfer tax. So today we're going to talk about the gift tax and the estate tax. These two taxes are unified, which is to say that what you do during your lifetime, gifts, affect what happens after you have died, estate. So the first thing that you need to know is all gratuitous transfers are captured within the concept of the gift and estate tax. The next thing you need to know is that there are three big exceptions to the gift and estate taxes. The first is that if you're married, you can give as much as you want to your spouse. There is an unlimited marital deduction. Second, you can give as much as you want to charity. There's an unlimited charitable deduction. Third is that the IRS doesn't want to know about all the little bitty gifts that you give to people. You give your kid a Christmas present, you give your grandkid a gift because he's cute. The IRS doesn't care about these little things. These are what the IRS calls de minimis. They're too small to care about. Then the question is, well, how small is too small? The answer to that for 2024 is $18,000. If the gift is less than $18,000, then the IRS generally doesn't want to hear about it. If all you do is make gifts of less than $18,000, then you don't have to file a gift tax return. That number, $18,000, is pegged to inflation. Now, it only increases in $1,000 increments. So as 2024 rolls into 2025, we'll see if it goes up, but it should, at least by the time 2025 rolls into 2026, go up by another $1,000, and then we'll have $19,000 annual exclusions. The federal estate tax annual exclusion is measured on a per donor, per donee, per year basis. So the way this works, I'll use my family. I have 4 kids. I can give each kid $18,000. And then go, so it's per donor, me, per donee, the kids, per year, 2024. My wife can give each kid $18,000. Different donor, same donees, same year. It doesn't have to be kids, by the way. It doesn't have to be relatives. You can give that amount to anybody you want. I just saw a woman walking down the street. I'd give her $18,000. I don't know who she is, but I could if I wanted to. Okay, so that's the annual exclusion amount. Now, anything that you transfer, whether it's during your lifetime or as a result of your death, that's not to your spouse, not to charity, and in excess of that $18,000, the annual exclusion amount, is a taxable transfer. Oddly, that doesn't mean you have to pay tax on it. In fact, the first $13,610,000 of taxable transfers, you don't have to pay any tax on. That's, again, the 2024 number. That number is also pegged to inflation. So as 2024 rolls into 2025, it should increase with inflation. As 2025 rolls into 2026, it should increase with inflation again. But the way the law is written, as 25 rolls into 26, the lifetime exclusion amount will be cut in half. The estimates are that it should be in the neighborhood of $7.5 million. That's also per person. So as a married couple, today, I could give away, if I had it, $13,610,000, no tax. My wife could give away another $13,610,000, no tax. Let me give you an example. Let's say I give away $2 million during my lifetime, then I pass away also during 2024. I've already used $2 million of my $13,610,000 exemption. So at my death, the first $11,610,000 will go tax-free. Anything in excess of that will be taxed at 40%. I hope this information helps. If you have questions, leave them down there. Take care, folks.